Hey everyone, welcome to another episode of Investing Kev. In today's episode, we're going to take a look at my 5 favorite Chinese stocks right now and Chinese news. It's been a quiet month for Chinese stocks earnings reports, so we won't be talking about it this month. The markets suck, it's depressing to look at my portfolios right now and everything is dropping, but I welcome opportunities like this. These are 5 stocks I'm investing in, and I have my convictions in these stocks. This is what I believe is best for my investing journey right now. So to be clear, this is not investment advice. Always do your due diligence and speak with a financial advisor. I believe that these 5 stocks have an opportunity to double in price in the years to come. I believe that some of them have the potential to run up 200, 300, 400%. There are no certainties as past performance is not indicative to future performance, but again, I personally have conviction in these stocks and I am taking that leap. If you like this content, please give me a thumbs up, subscribe, and let me know in the comments what you think. Alright everyone, it's good to be back, let's get started. The 5 Chinese stocks right now that I'm investing in heavily are Alibaba, NIO, Tencent, Baidu, and Bilibili. Alibaba ticker BABA, NIO ticker NIO, Tencent ticker TCEHY, Baidu ticker BIDU, and Bilibili ticker BILI. I don't want to spend much time talking about these stocks, not because I've talked about them a lot before, but because the fundamentals of these companies have not changed. I want to show you my dollar cost averaging journey the past month. When we take a look at NIO, I made 5 purchases within the past month. Last month on September 15th, I bought NIO at $21.71. My current investment is currently down 48.3%. When we look at October 14th, I bought it at $12.12. I'm currently down 7.6%. And on October 19th, I bought it at $10.86. I'm currently up 3.2%. When we look at Alibaba, on the 15th of September, I bought it at $89.83. I'm currently down 20% on my investment. On the 14th of this month, I bought it at $73.95. I'm currently down 2.4%. And I bought Alibaba again at $71.14 on the 21st. I'm currently up 1.46%. Looking at Bilibili, on the 15th of last month, I bought it at $18.08. I'm currently down 39%. Last week, I bought it at $11.42, and I'm currently down 3.3%. Looking at Tencent, on the 16th of September, I bought it at $37.29. I'm currently down 20.5% on my investment. On the 14th of this month, I bought it at $31.25. I'm currently down 5.1%. And on the 18th, I bought it at $31.73. I'm currently down 6.5%. And looking at Baidu, my purchases have only been this month so far. On the 17th, I bought it at $102.45. I am already down 11%. And on the 21st, I bought it at $90.76. I am currently up 0.5%. I believe dollar cost averaging is the best investment strategy in general, especially during times like this. A lot of people say they'll buy during a downturn, but when stocks are crashing, they get scared. I believe 5, 7, 10 years from now, I'll look back and be happy I invested during these rocky times. Like I said before, these stocks' fundamentals have not changed. These stocks are getting pummeled because geopolitics and the looming talk of recession is nonstop in the media every single day. Every single news outlet won't stop talking about the looming recession. And when it comes to China, no matter how much good news currently comes out from that country, there are factors that completely squash everything else. I want to take a look at the major news that has happened so far this month and why these stocks are getting hammered. The first biggest news is that US chip sanctions imposed by Biden are going to kneecap China's tech industry. The sweeping new controls are designed to keep the country's AI industry stuck in the dark ages while the US and other Western countries advance. The restrictions also block the export of chip-making equipment and design software. It also bans the world's leading silicon fabs, including Taiwan's TSMC and South Korea's Samsung, from manufacturing advanced chips for Chinese companies. Here's a few Chinese companies that use US chips. Baidu, the leading Chinese web search provider and a key player in cloud AI services and autonomous driving, also uses NVIDIA chips extensively in its data centers. Last October, the company announced one of the world's largest AI models for generating language built using NVIDIA hardware. ByteDance, the Chinese company behind TikTok and its counterpart in China, Douyin, relies on NVIDIA hardware to train its recommendation algorithms, according to its own software documentation. The Biden administration believes that the hype around the transformative potential of AI in military applications is real. The United States also has a pretty good understanding of which computer chips are going into Chinese military AI systems, and they are American, which is viewed as unacceptable. And the next article comes from this Australian news outlet about China's semiconductors industry rocked by US export controls. This is what annihilation looks like. China's semiconductor manufacturing industry was reduced to zero overnight. This is from an entrepreneur who tweets under the name Li Dang. To put it simply, Biden has forced all Americans working in China to pick between quitting their jobs and losing American citizenship. Every American executive and engineer working in China's semiconductor manufacturing industry resigned yesterday, paralyzing Chinese manufacturing overnight. One round of sanctions from Biden did more damage than all 4 years of performative sanctioning under former US President Donald Trump. The next article comes from Reuters on the impact of chip sanctions. Lam Research warns of up to $2.5 billion revenue hit from US curbs on China exports. Lam Research, which gets 30% of its business from China, is the latest company to flag a hit from the sales restrictions. Applied Materials, ticker AMAT, last week estimated a 250 million to 550 million drop in net sales in the quarter ending October 30th, with a similar impact expected in the following 3 months. The next biggest news, in my opinion, is related to zero COVID policy, as the government might reduce quarantine times. This is from Bloomberg. China is debating a reduction of COVID quarantine for inbound travelers. Bureaucrats are looking at cutting the quarantine period to 2 days in a hotel and then 5 days at home, said the People, asking not to be identified as the discussions are private. Currently, China requires 10 days of isolation on entry into the country, with 7 days confined to a hotel room and then another 3 days at home, where people are still monitored and subject to regular testing. I think that would honestly be a lot more acceptable for tourists, although no quarantine would be preferred. But going from 21 days down to 10 days down to possibly 7 days can play a huge role for a lot of Chinese sectors. Another blockbuster news is that Xi Jinping securing a third term, which should not come as a surprise to anyone. The National Congress was held and Xi Jinping has also found his core team. Our economy's strong fundamentals will not change, and it will remain on a positive trajectory over the long run. We'll be steadfast in deepening reform and opening up across the board, and in pursuing high-quality development and create more opportunities for the world through our own development. Xi also acknowledged that it would not be smooth sailing for the new leadership because there would be high winds, choppy waters, or dangerous storms ahead. In the face of new challenges and new tests on the new journey, we must be highly vigilant, always keep the sobriety and prudence of rushing for the exam, and continue to push forward for the comprehensiveness and strict governance of the party, so that the century-old party will continue to flourish in its self-reform and remain the most reliable and strong backbone of the Chinese people. And finally, the last major news is the talk of Taiwan, which will not go away anytime soon. This is from Bloomberg. Secretary of State Blinken says that China wants to seize Taiwan on a much faster timeline. China has made a decision to seize Taiwan on a much faster timeline than previously thought, Secretary of State Antony Blinken said on Monday, shortly after the Chinese leader reiterated his intent to take the island by force if necessary. And this article from Reuters came out a few days ago, where the U.S. is considering joint weapons production with Taiwan. The U.S. government is considering a plan to jointly produce weapons with Taiwan, a business lobby said on Wednesday, an initiative intended to speed up arms transfers to bolster Taipei's deterrence against China. U.S. presidents have approved more than $20 billion in weapons sales to Taiwan since 2017, as China has ramped up military pressure on the democratically governed island Beijing claims as its own territory. In to counter what Antony Blinken had to say about China in terms of Taiwan, this is what Xi Jinping had to say. We will continue to strive for peaceful reunification with the greatest sincerity and the utmost effort, but we will never promise to renounce the use of force, and we reserve the option of taking all measures necessary. This is directed solely at interference by outside forces and a few separatists seeking Taiwan independence and their separatist activities. It is by no means targeted at our Taiwan compatriots, he said. Overall, I do believe that there will be more pain in the markets, especially as Chinese stock investors. I am standing firm in my convictions and continuing to invest in dollar cost average. If you're a Chinese investor, let me know what your plan is. If you like this video, please give it a thumbs up, subscribe, and let me know in the comments what you think. As always, thank you for tuning in, stay safe, and I'll see you all next time.